Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 29th of October, 2019, and the time as we're talking now, about 3:40 p.m. Central Daylight Time. So as we look at the markets, gold down about $5 at this hour. These aren't the final settlements, but they're right in this area. Down around 5.5 cents in the silver, copper up a little bit. Continued strikes in Chile and more problems there. And platinum up a little bit. That's not bad. Then we've got the dollar down. Now remember, tomorrow's the FOMC announcement at 1 p.m. Central Time. About a half hour later, we get the Fed press conference. Then on Friday, we're going to get the Bank of Japan's announcement on what they're doing on their monetary policy. There's plenty of other reports along the way, folks. We get the first look at GDP and so on. But in looking at the markets, tomorrow's probably the big event, and then we start looking at the other numbers. So when looking at these, pretty stable in the metals, not much to worry about yet off the API numbers. And let's go to the charts and see the action. As you can see, silver so far, and we're only at the end of the second day of trading, we're down about $13 for the week. The market keeps making that move as we talked. Is it going to get down to that 18-week average and try to hold that? Well, you're now $6 away from it, and the way I do my math, let's see if I can get this to do what I wanted it to. Yeah, there we go. The market, if you take a look, has been moving on this average about $4 or $5 a week, so it wouldn't surprise me if by the end of the week we're close to that number. I say that even if you're up, you'd have to be up sharply, otherwise the two are going to drift together come Sunday night. When we take a look at a daily bar chart, you can see how the market tried its upswing, failed again at this 1520 level, and has been pulling back. Now the reality of the situation is today you did a lot of damage to the chart. What do I mean by that? You have a higher high and suddenly you have a lower and low pattern. You stepped out of the uptrend. If I take away today's action, the market on this pullback still looked pretty good because you had higher lows and higher highs. By doing this, you now have to go into what I call a rebuilding pattern if you believe, as I do, that trends come about with either higher highs, higher lows, or lower highs, lower lows. Right now, we just seem to be stuck against this 18-day average of closes. If you take a look, you hit the upper Bollinger Band in retrospect back 3 days ago and fell. Wouldn't surprise me if you get down to the lower Bollinger Band, and between that and the 100-day average, the market tries to get its legs under it and see if it can hold. In terms of momentum, it's down. So I have momentum down. I have bias down, as I define bias as either up, down, or sideways, depending on its relationship to the 18-day average of closes. And yes, there are times where it closes right on that number, but when it's under it on a closing basis, which it'll be today, the bias is down. Are we trending? No, because you got the higher high and the lower low. When I go and take a look at GLD, the popular ETF, the low was 139.78. The previous break low right here, if we come there, was 139.72. So you're liable to say, well, it didn't take that out. Doesn't matter. Coming in, you already had the lower low. You had gone up just like you did in the futures to the Bollinger Band. Yesterday, you pulled all the way back to that 18-day average. Today, you're under it. So just like the futures. The bias is down. You're void of a trend. You have a lower low, higher high pattern. Momentum down. In plain English, I don't see anything. Now the market could have support at 139.29 to 137.96. I also can tell you, both on the futures and on the ETF, that even if you moved up here, in this market, you can get an uptrend, not the futures. Why? Let's assume you don't take out 139.72 and you move back up over today's high of 140.63 and you close over the 18-day average of 140.77. That would give you the bias up. The swing line would turn back up as long as you don't take out that 149.72. That's the if. Right now, that's not there. In GDX, the market's got a pattern and had the pattern of a lower low, higher high coming in. Then if we take a look at yesterday's range of 2744 to 2700, and we look at today, well, the market made the lower low, came back up, couldn't do anything with it. So we still have, I think, a lower low, higher high. I think I might have had a bad quote in here because I know I did this and it looked like it was over it originally, so they might have come in and straightened that out. You have no trend. You're just hanging at that resistance and level of the 100-day and the 18, and you're just sort of stuck right here. The gold-silver ratio is still favoring the silver market. You can see that. It's still breaking down there, and as such, the silver is still in an uptrend. Why? You still have the pattern of higher lows, higher highs, but you are caught in this narrowness of this Bollinger Band. Now, the longer it goes sideways in there, the ultimate bigger move it's going to make. Your guess is as good as anyone else's. Is it going to be to the upside or downside? The last quote is 1782. You got as low as 1760 and a half. You went all the way down, went to that 18-day average, and you held that market well. That, I think, gave a little ray of hope to the bulls. Take out this number back here, and that number is 1748 and a half, and the chart will go just like in the futures and the gold, neutral. You'll have that higher high, lower low. What's the number that's going to be the resistance? Right here, the upper Bollinger Band. Very tight range, no edge on what momentum is doing. It's just drifting sideways. In the copper market, we still have a bull market at work, and we have one with an embedded reading. I'm going to repeat what I said before. This is still very much a supply-driven market now, not so much demand. I was looking today at the iron ore demands for steel in China. They're down, not up. And that's because they've been seeing this pressure all through their economy. They're the biggest consumer of copper, but the largest producer of copper is where the problems are in Chile. And you can see how this market's been running on it still. In an uptrend, I'd watch very carefully today's low. It's an outside day up. When you take out the low of an outside day up, it's often a sign there's something wrong if it happens in the next business day or the one after that. So 2 bars is the way to call it. I also look at it on 5 and 15-minute charts and the like. In the platinum, still bullish. Not all the metals are in bad shape here. Silver's bullish, copper's bullish, higher lows, higher highs. In platinum, bullish. If we come to the palladium market, you still have a pattern here where you've stayed over the 18-day average, and all you do is keep hitting that upper Bollinger Band with an embedded reading. That keeps this market very bullish. Lose that reading, and that's where I think you lose the momentum to the upside. Have not done that yet, but yet you did lose $26 of pricing today, but that is also, if you take a look the day before, the market went up $35 in pricing. So overall, the market went for a new high, and it gave up some of that. Just keep your eye, in my opinion, on where you're at there. Then we get to the dollar index, which is an outside day to the downside. Now, the next support level, the 100-day average of closes, and it did have validity before. Obviously, traders are looking to see should the dollar go up or down after what the Fed says tomorrow. The market's got a 94% probability of the Fed cutting interest rates a quarter point tomorrow, but the market also thinks it's one and done for the rest of the year. In other words, this will be the 3rd consecutive cut, and that's it. So there's one remaining, and then they won't do anything for a while. The trick is going to be, how does Mr. Powell explain that, walk it back without saying he's pulling the rug out from under the market in terms of if the market needs the Fed, they're there. That's what he'll have to do. He'll do it, and I think the market will have to digest that. But going in, you don't have a trend. You have a bias that's down. You have a market that's oversold. Does it want to correct that oversold by rally? What's going to happen here? In reports, it's always very dangerous. Now, one of the things that our group does is we write about this. So tomorrow, I promise you, we're going to have a lot of reports out. Brexit today, for example, there's a December 12th vote now that was approved. I was watching that just before I recorded this. So that part is done. And now we'll get a better idea, can Brexit happen? Of course, the trick's going to be for Mr. Johnson to get a majority government, because every time there's a minority government, they start putting amendments on bills and nothing gets done. That's going to be discussed probably within our news here. We talk about that, certainly in the oral commentary. And I'm going to repeat again, if you haven't tried our software products, it could be our handheld devices. It could be our desktop devices. Well, they'll talk to you. Yeah, I know that sounds crazy, but we have people all day long putting out oral commentaries. They're in there. You can just press the media. They'll play back to you, so you don't have to be right in front of it as it's occurring. And you'll break it down by the different categories, such as the metal markets, interest rate markets. All these different areas are what we cover. If you haven't tried our information in the different formats, it's very easy to do so. All you need to do is go to our website at www.iraepstein.com. You can always call us the old-fashioned way. We do pick up the phone and we'll get you all set up. Or you can click up here. If you're watching me on YouTube, it'll take you right there. In the meantime, you have a great evening. It's going to be an interesting day tomorrow. Let's see where the, if you will, the Fed leads us. I'm Ira Epstein. You have a good day.